det her fint nok? 1, 2, 3, 4, 5. Goddag og velkommen til Saxo Bank Market Call. Det er godt nok. Fantastisk, fantastisk.
morning and welcome to Saxo Bank Market Call. Today is Friday, the 9th of November. We'll start out with yesterday's news bullets. Early we saw the Swiss unemployment rate coming out a tad higher than expected at 2.6% versus 2.5% expected. However, we still regard the Swiss currency as very strong and could see a rate increase from the Swiss National Bank ahead of year end. That is, they will probably hike rates, or could hike rates, 25 basis points, so the benchmark rate will be at 2.75%. Then we had the German trade balance out, also showing strong postings, coming out at 18.1 billion versus 16 expected, and also the current account came out stronger than expected at 15.4 billion versus 12.1 expected. From the Czech Republic, we also had strong figures. We saw high consumer prices and also strong unemployment rate figures, posting strong gains in the Czech currency. From Sweden, the industrial production disappointed, but looking forward, we have some very important Swedish figures, which also will be important for the rate outlook and, of course, will be interesting for the Swedish stock market and the stocky currency. Focus was yesterday on the rate announcements from the Bank of England and the Eurozone, who both decided to keep rates unchanged at 5.75% and 4% respectively, as we expected. From Canada, we saw the housing starts disappointing a tad, and the new housing price index also coming out a tad lower than expected, showing a monthly increase of 0.3% versus 0.4% expected. Overnight, we saw the Japanese industrial production out as expected, showing a monthly drop of 1.4%, and the capacity utilization came out a tad lower than expected at 108.6 versus 109.7 prior. Looking into the market developments, well, in FX markets we saw a further dollar weakness after Bernanke commented that he sees risks to the growth on the downside and expects growth to decelerate in Q4. We saw dollar selling off. We see now cable above 2.11 and euro dollar rose again above 1.47. In fixed income, well, as the dollar sold off and stocks fell, investors fled to safe haven, which benefited the US bonds, which notes higher, and JGBs overnight complete a second weekly gain. European bonds was, however, little changed. The stock markets, well, overnight the Asian session was quite mixed, with Nikkei down 1% and Hang Seng and ASX in Australia both going higher. In the US, American equities broadly lower, with the exception of S&P, who managed to close up marginally with an 0.07 gain. In commodities, well, crude prices again higher, with the December contract trading above $96 a barrel, and gold consolidates around $834 an ounce. So what's going on? Well, yesterday we saw Federal Reserve Chairman Bernanke testified to the Joint Economic Committee, acknowledging the economic expansion could cool. Speculation is reheating that further rate cuts would take place in the US following 75 basis point cuts over the past 2 months. Actually, in the futures markets, traders are 90% of the traders are betting that the Fed will cut rates again 25 basis points this year. Well, as I mentioned, the dollar depreciated against 13 most traded currencies on rate cut speculation, with cable now about 2.11, and the yuan heading for its biggest weekly gain since 2005. In the equity markets, the global equities are broadly lower on sentiment of slowing US economy, with financials in Asia leading the losses. Commodity and energy stock gains balance the picture somewhat, as rising commodity prices support the resource providers. With regards to oil, well, as an approaching storm in the North Sea and weeks-long outage in Texas refinery pushed crude prices back to $100 a barrel, at least in that area, we see it actually breaking above $100 a barrel within the short term. And of course, as I mentioned, the December contract trading above $96. Looking into the calendar items today, well, this morning we have the release of the Norwegian CPI prices, The headline is expected to come out at 0.4% month on month, and the core rate is expected to come out at 0.2%. From the UK, we have some trade balance figures. The total trade balance is expected at minus £4,100 billion. And from the Eurozone, we have the leading indicators, which showed a prior figure of 107.3. Focus will be on the US figures after lunch, where we have the trade balance released at 13:30 GMT, expected at minus 58.5 billion, which is a slight increase of the deficit since prior time, or since August, when the figure came out at 57.5. Also, the import prices will be very important. These are October figures and should have the rate cut from September priced in. So the monthly figure could surprise to the upside. Expectations points towards a figure of 1.2%. At 15 o'clock, we have the University of Michigan Consumer Confidence, which is expected at 80. Going forward, well, on the 12th of November from Japan, we have a string of GDPs. These will be very important, as in the previous quarter we saw a negative growth. This is expected to change. The quarterly figure is expected to rise 0.5%, and the yearly figure is expected to rise at 1.8%. From Sweden, we have a string of CPIs. These are, at least on the monthly figure, expected to come out in negative territory, which could be bad for stocky-related clients or stocky-related positions. And from the UK, we have a string of PPIs on Monday, and on Tuesday we have a string of CPIs. Both are expected to come out strong. Also, the DCLG UK house prices should be noted on the 12th of November, where the prior figure was at 11.4%. From Germany, we have the ZEW figures on the 13th. They are both expected to drop slightly from prior figures. And also the Eurozone, we have the ZEW and industrial production. On the 13th, the Japanese central bank will also release rates. We expect them to keep rates unchanged at 0.5%. Going into today's trading strategies, well, dollar yen, we have signals on both sides, so we will do a breakout play. We will buy the break of 112.89 bid, targeting 113.30 with a stop offer at 112.74. To the downside, we will sell the break of 112.22 offer, targeting 111.60, which is a key support. These are the lows from August, just ahead of the Fed surprising cut in discount rates. We recommend placing your stop at 112.51 bid, and be careful with position sizes. In equities, we recommend buying the recent dip in Vodafone. The ticker is VOD, registered in London. Well, the background for this is a rally led by banks in the late US trading should make for a positive sentiment going into today. However, gains will be somewhat restrained by the concerns still in the markets. These were boosted yesterday by Bernanke stating a possible declining in growth. We will buy Vodafone towards 182 with a stop at 175, and we're targeting 195. We like the trend in the stock and see a good amount of support around 180. Thus, we are biased towards 180 with a stop at 175 and targeting 195 initially. Besides that, we are fairly bullish on the entire markets, equity markets today, with exception for the Nikkei. That's it for now, and happy trading and have a nice weekend.